Good morning, everybody. It's Tuesday, September 3rd, 5:25 a.m. Central Time. Happy New Year. It is a new marketing year for corn and soybeans. Happy to have the old one behind us. December corn futures down 2 cents at 3.99. November soybeans down a quarter at 9.99 and 3/4. December Chicago wheat down 5 at 5.46 and a half. December Kansas City wheat down 7 3/4 at 5.57 and a half. December spring wheat down 6 1/4 at 5.94 1/4. Let's start off with Friday's price action.
So corn and soybean futures rallied on Friday. The December 24 corn contract gained 5 cents per bushel and closed above the $4 per bushel mark for the first time since August 19th. New crop corn futures have rallied 16 cents per bushel from their late August low. The November 24 soybean contract gained 8 cents per bushel and closed above the $10 per bushel mark for the first time since August 9th. New crop soybean futures rallied 53 cents from their August low to last week's high. Farmer selling has perhaps been reduced now that September 1st notice day has passed. Some analysts have argued for a seasonal low in both markets following last week's action. Private groups estimate that fund traders were net buyers of 15,000 contracts of corn and 10,000 contracts of soybeans on Friday.
The harvest lows have been posted. That's what I keep hearing everywhere. I don't have any opinion on that. I'll tell you this. If the harvest lows were posted in August, that's not totally crazy. On average, over time, the harvest lows in new crop corn and new crop soybeans occur on October 1st. That's on average over time. But that means that some of them come earlier than that and some of them come later than that. So if the low in late August in corn and the low in more so mid-August in soybeans, if that was it would not be totally crazy. In order for those to have been the harvest lows, I think you probably need a few things to happen here. You may need to get into U.S. row crop harvest and find out that maybe the crop's just not as good as expected. Maybe the yields just aren't there. That's not a prediction, but that may be one thing that you need to see in order for those to have been the harvest lows. You may need to see a drastic improvement in demand, especially on the export front. We've seen some better weeks of sales, but we're still not quite where we need to be. We're seeing sales and flash sales with more frequency. We've actually seen some pretty good weeks of soybean sales, but I think you need to see more of that. The other thing would be South American weather, and we're getting very close to the South American growing season. I think they've already started some corn planting. So there's a number of things and maybe a combination of those things that would help us to kind of dig our way out of the doldrums here in terms of price action. So I don't know. I have no opinion on whether or not those were the harvest lows. If you guys think they were the harvest lows, drop me a comment in the YouTube video here. But the charts look better. I mean, you look at the soybean chart, we broke out above a long-term trend line. Corn is not above a long-term trend line necessarily, but looks a little bit better. So things maybe a little bit more optimistic here to start a new marketing year.
Brazilian soybean crops are experiencing the worst drought conditions in over 40 years. Due to a lack of precipitation in recent months, some areas are facing the driest conditions on record since 1981. Soybean planting in Mato Grosso is expected to be delayed due to below average rainfall in September and October. Typical spring rainfall is forecast to be delayed until late October. Dry weather is expected to persist for at least the next 2 weeks with no rain in the forecast.
Now, make no mistake, our summer months here in the United States, your June, July, August, those are very dry months in Brazil. I pulled a annual precipitation map from Campo Grande, which is in central Mato Grosso. And you can see your June, July, August are very dry. And then September, October is generally when the rains kind of turn back on. Our friends at CropProphet sent me some really great maps. So this is observed precipitation versus as a percentage of normal over the last 60 days. And it's been very dry. Most of these areas, less than half of their normal precipitation, both in Brazil and Argentina. And those are big time soybean areas in Brazil. Now, it's half of a very small amount. If you look at this version, they're running, when you take Brazilian soybean production, weighted average area over the last 120 days, they're running about a 2-inch rainfall deficit, which I guess is substantial in the drier months. And then the forecast is very dry, less than normal rainfall expected in the 1 to 14 day period, and then also through the 14 to, I guess, would be 20-day period. So if you're a large money manager and you're sitting on a big net short position in the soybean market, which we'll talk about in a second, Are you out of position here? Is this something that you're worried about? It doesn't appear to me as if they're worried yet. USDA is projecting, of course, a monster Brazilian soybean crop, 169 million metric tons being projected, which would be a record. And a, a crop of that size is what leads USDA to this projection, the projection that your world ending stocks to use ratio in soybeans will be the largest of the last 25 years, even larger than the 17, 18, 19 period where we peaked just at about 33%. They're projecting 33.3. You got to remember the last time that the stocks to use ratio was this high globally, soybean futures in the US were in the $8 to $9 range. They weren't $10 and above. But a lot of this is contingent, of course, on that big Brazilian crop and also the big yields here in the United States that are being projected, neither of which are a guarantee. So, yeah, if you fast forward 2 or 3 weeks, and it may not even take that long, if these dry conditions and there's not rain in the forecast in Brazil, the trade may start to take notice for sure.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about a premium video from last week?
I did a grain marketing explainer on Friday, and in these grain marketing videos, I run through every cash sale that I've advised for corn, soybeans, wheat. I think this one was actually just corn and soybeans, but I run through the logic. I tell you exactly what percentage I've advised that customers be sold. This one was specific to new crop, and I talked about how in this past marketing year and now in the new marketing year, there's going to be a lot of tough decisions when it comes to grain marketing, and I think that you're going to have to make some tough decisions for the betterment of your operation. My contention is that grain marketing has become too complicated. The grain marketing industry, if you want to call it that, has overcomplicated something that should be really simple. Grain marketing is very difficult. This is the hardest part of farming for a lot of you guys. But I think that if you take the complication out, you can maybe make it just slightly easier. It's still very difficult no matter how you do it. But I think simplifying it is the way to go. That's my personal opinion, and that's the approach that I take. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. If you sign up, I will forward you a copy of this morning's email, which includes that video and all of my cash grain marketing recommendations. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. I'll give that deal a shot this morning, guys.
Fund traders continue to hold a massive net short position across the grain complex. CFTC released weekly commitment of traders data on Friday. During the week ending August 27th, the funds were net buyers of 9,000 contracts of corn. The net short of 249,000 contracts is historically large. Funds were net buyers of 411 contracts of soybeans. The net short of 168,000 contracts of soybeans is also historically large. And finally, funds were net sellers of 6,000 contracts of SRW wheat on the week.
So still some large net shorts. There was absolutely some short covering late last week, and I wonder how much more we'll see. So prior to first notice day, I think that the funds were able to cover a lot of that net short in the corn market, and they were met by farmer selling, and that's why the market didn't move or actually moved lower during that time frame. And now you may see farmer selling reduced for just a couple of weeks. This period between first notice day and when you get into like the early part of Midwest harvest, you could see slightly reduced farmer selling, which could open the door to some further upside in the market if these large speculators decide that they want out. The net short combined across corn, soybeans, and SRW wheat is still very large at 472,000. It was out to 550,000 at one point. So it's come off a little bit, but still a very large net short position.
Farmers are turning to used equipment due to a drop in grain prices. Used tractors were the main attraction at last week's Farm Progress show in Iowa as farmers searched for bargains. Big Iron Auctions had its largest ever used offering at the show, with nearly 4 times the usual amount of used equipment. Grain prices have fallen to their lowest level in 4 years due to abundant supplies and weak demand. And as a result, farmers' profits have dwindled, forcing them to cut back on equipment purchases. As stockpiles of used equipment continue to grow, prices of used equipment are expected to decline further.
Profits have dwindled if you're in a good situation. For a lot of you guys, profits have vanished. They're nowhere to be found. There is no profit. Chris Barron at AgView Solutions, our good friend, tells me that for most farm operations, machinery and equipment is the second largest line item on their budgets behind land. So machinery and equipment eats up a lot of money. And this is probably one place that farmers can cut back a little bit without really reducing yield potential. if you go and you start cutting fertilizer and things along those lines, you're going to cut your yield potential. Whereas if you just get a little bit more thrifty and economical with equipment, maybe you can keep your yield potential up while spending less money. So that's the route that farmers are going to go. And I would venture to say that the equipment market is going to be in tough shape for a while as we move forward.
USDA reported multiple flash sales on Friday. U.S. exporters sold 5 million bushels of soybeans to China for delivery during the 24-25 marketing year. U.S. exporters also sold 100,000 metric tons of soybean cake and meal to Colombia for delivery during the 24-25 marketing year.
The sales keep coming. More soybeans to China, and China will buy and will import some U.S. soybeans this year. But every year, our window of opportunity to ship soybeans to China shrinks because Brazil keeps getting bigger and bigger, and their growing season gets a little bit longer, it seems. So I don't know. We're not where we need to be. I'd love to see more of this. I'd love to see some bigger numbers. I'm not unhappy to see this. It's just like when I see the numbers and it's soybeans to China, and then I see the numbers 132. I guess it makes me a little bit disappointed that it's not something larger, especially when you consider how low our prices are and the fact that the U.S. is competitive on the export market. What did cattle do last week?
Cattle futures were higher on Friday. Live cattle were 70 cents higher to $1.10 higher. For the week, they were an average of 196 higher. Feeders were up 50 cents to $1.60 higher on Friday, and for the week, feeders were an average of 264 higher. Cash cattle trade was steady to lower last week. Down in the Texas Panhandle, cattle were steady at 183. In Kansas, cattle were $1 lower at 182 to 183. Up here in Nebraska, cattle were steady at 184, and over in the Western Corn Belt, cattle were $1 to $3 lower at 183 to 185. Box beef was mostly unchanged on Friday. Choice end of the day at 309.34, that was up 68 cents, and select end of the day at 295.82, that was down 32 cents.
U.S. dollars just a little bit higher this morning, got beat up late last week. Stocks are off. The S&P's down 30, the Dow's down 220, bonds are flat. Crude oil is down $1.28 at 72.27 in the October WTI. Have a great week, guys. We'll talk to you on Wednesday.